MRF has set a new record on D Street. Shares of the company rose nearly 1.5% in trade today to hit a lifetime high of 1,440 rupees on the NSE. The Chennai-based tire manufacturer has become the only listed company in the country to cross the 1 lakh rupee mark. By the end of the trade, stock was up more than 1,000 rupees and closed just 8 rupees shy of 6 figures. Incredibly, the stock has given a 46% return in the past 1 year. My colleague Sakshi Batra spoke to market analyst Shailendra Bhatnagar and started out by asking him about the rally as well as all the action in the trading session today. Listen in.
So, Sakshi, there are a couple of things that are working very well for MRF. If you think it's a 50% return from 1 year ago, in this century alone, suppose we take 2000 as the starting point, I'm sure you must have been in third or fourth standard then. From then on till now, the stock has been a 100-bagger, which means that MRF in 2000 was quoting at 1,000 rupees, and in 2023 it's at above a lakh. So it's gone up 100 times in a span of 23 years. And primarily the reason behind that is a very low liquidity in the stock, which basically means that one, the price ticket is very high, so retail investors generally don't come in, and institutional investors are, from what we've heard on the street, very clear in the mind. Of course, the management also takes a lot of feedback from the market, and they're very clear. Don't split the share, don't reduce the face value, stick to what it is, ensure that there is little liquidity as possible, so that because of the lack of liquidity, the stock keeps on, have that additional momentum to go higher and higher, higher and higher. So in 2012, it was at 10,000, 2014, it was at 25,000, 2016, 15,000, 50,000, 2018, 75,000, and 2023, we are at 1 lakh. Let's see what happens in 2030.
Right, absolutely. But, are you actually now looking at a 2 lakh rupee target at all? Is that still feasible to think, or is it still a very, very far off thing that one can imagine?
So, Sakshi, 2 points really. I don't think so, this is a point to enter the stock. Let's be very, very clear. The market is very, very overheated, and end of the day, MRF has an excellent brand, but it's a little on the higher side as far as valuations are concerned. But for those who have the stock, absolutely do not exit, and those who wish to buy, even at these 6 digits, I would just say wait and let it correct a bit. If it does, you're lucky. If it doesn't, then well, you were never a part of the rally and you never are. So what can be done? But I don't think so. This is the time to jump onto the bandwagon. It's extremely overheated. If you look at, the momentum, the price is above short, medium, and long-term moving averages. We've seen increasing volume, but it's very, very risky unless you're a very smart trader to come into the stock.
That's very true, Shail. But like you pointed out, Shail, that the stock has, the company has never given out a stock split or a bonus. Of course, dividends is what we have constantly seen. But going forward also, even as the company goes more expensive from these current levels as well, one cannot hope for that. And you did say that, of course, this is not the right time for investors to enter. But for those who already have this stock, is it the time to book profits?
Sakshi, the entire edifice of MRF has sort of been built on lack of liquidity. You would be surprised to know there are only 42 lakh shares in the float. So, and if you just look at how the data is, the top 6 institutional holders in the quarter that's gone by, say between December and March, 5 of them have actually increased their shareholding. Okay. Which basically means that, more and more liquidity, whatever is the minimal float left in the market, has also been slowly sucked out. So my suggestion or my thought is, if you are a part of the rally, do not get off the bandwagon. Just enjoy this wonderful, wonderful ride that's coming up in front of us. And if you don't have the share, I don't think so. At 6 digits, it's the
Yeah.
time to. Yeah.